Welcome to a very special presentation, one that we rarely ever provide to the general public on Fibonacci applications and Fibonacci extensions. In this case, where the market is poised to trade up into, again, more brand new highs, how to predict future price profit targets to the upside that the majority of traders, 90% of traders, don't have any idea at all that exists in order to be able to navigate your way into new market highs. And as well, when the market corrects to the downside after reaching certain levels that we're going to lay out to the upside here, how to play that short and profit from that as well. Today is June 11th, 2024, the near contract month on ES. The chart you're looking at right now is still 624, soon to be rolled into 924. You're looking at a Fibonacci application on this chart on the price action that the point of origin exists here. Here's your connect point right here. And here's the penetration above that area, probing new market highs. Now, current prices are trading on this end of day chart, but in real time, updated right now at 56.25. There's 53. 56.25 at 8:36 a.m. Check me if you want. The prices to the upside that are laid out are a 50% level between the above Fibonacci extension level here back down to the highest point of the original application here. We don't have time to go into exactly how to overlay this extension on top of the existing original layout to get these targets to the upside. So let's suffice it to say that these are the levels that we can count on to the outside on an end of day basis. And I want you to save this video and check me again as time goes by if in fact the market trades up. So it's 76.40 to the upside at around 55.66.75. We'll round it down a tick. And below that right here, okay, is right near where we're trading now, a little below it at 53.56.25 right there. So this red line here is the 50 level between what's above and below. And this is the key, traders, because in this case, there's too much distance. So here we have something again, the 50 between these two that's laid out. That level itself should act as a target to the upside when and if the market will continue to trade to the upside. And again, after 76.4, count them out. 61.80 at 57.24, 50%, 58.47, 38.2 at 59.72, 23.60 at 61.27, and a zero full retracement to the upside at 62.78.35. We'll up it a tick. Now, once we have this completed, the way that we have successfully done it here, we want to move into other charts and drill it down. So let's scroll through mine and see if we can get a hold of the half-hour chart that I have laid out. And here it is. The selection of the data points are here and here as circled. Now look at how the prices are contained between here to here. This level at 38.2, to 23.6. Broke out of here and tapped out at a 0% retracement at 53.66. That's no coincidence. Now to the downside, back up, contained in here again. Long story short, traded right back up on a half-hour chart. Every bar is 1 half hour, and this is where prices are trading exactly right now, 53.57. So now we have a shorter term time frame view of our Fibonacci extension on a half-hour chart. And again, on a half-hour basis, looking at the upside levels. In this case, here they are at 61.80, getting above this level here, which is the 50 from above below. Then 50% at 54.68, 38.20 at 55.14, and all the way up to 23.6 at 55.71, and a full 0% to the upside retracement at 56.63. So now on a half-hour basis, end-of-day traders, longer-term time traders now have a guide, a mapped out way to be able to determine when and where should I be looking to get in, when and where should I be looking to get out, based on something, once again, that 90%, and I'll take that lightly, it's more like 95% of the traders across the globe have no idea whatsoever that exists. So honing it down to a shorter term time frame, let's get right into a 15-minute chart, take a look at that, and see where we stand. Here it is, your 15-minute chart. This is the 50 level from below to above that I flew in right here. The approximated 50 level between these two levels because the distance is too great. There it is again. Here's where the high tapped out at exactly there, at exactly 53.85.50. There we have it. Taking it back down some here. The levels to the upside in this case, 61.80 at 53.97, 50% at 54.16, 38.20 at 54.36, 23.60 at 54.60, and 0, 100% retracement, back up to 0 on the upside at 54.99.42. We'll round it up to 45. So we have successfully laid out the macro level on the end of day chart, drilled it down to the half-hour chart, and then drilled it down again to the 15-minute chart. People, wherever you are, this is a technique that will help you markedly in being able to determine when to get in, when to get out, based on a methodology that we use here on the VTC trade model selection methodology is very strict. In conjunction with that, to be able to determine in this particular case where the market might go. I don't think the market is traded up to the upside yet because this contract is going to roll. So the smart money is waiting for that to happen. After this contract rolls, which could be rolled as soon as tomorrow or possibly the 15th, we still have 4 days left in this trading week. Okay, it's an odd week, so let's pay attention. In any case, we're ready today, right now, mark to the market based on what we've laid out. If the market should trade up on a 15-minute chart, exactly where we should consider being long with a new position size, probably scaled down, breaking out into new highs until we're sure. And how are we going to be sure? We're looking for this kind of volume coming in here, but over here. Without this kind of volume or accumulated volume, which will show up on an end-of-day basis over here, the smart money has not yet made the decision. That's it. The smart money, again, for those of you who are new to us, are the largest institutions who can and do move price levels from one area to another. They are the deepest pockets. They are the BlackRocks. They are the Vanguards. They are the State Streets. They are the offshore hedge funds, the largest ones, the Rockefellers, however you want to categorize them, that are manipulating price and movement from one level to another based on what they want to do so that they make the lion's share of the money. Your job as a professional, one of them should be to learn this technique, get it down, and include it within your current trading methodology or something that we can provide here for you to help you and get your trading on a much higher level, right? So that you can capitalize on when and where these people move, tracking their footprints to be able to get yourself into the arena, into the Coliseum, stay there, and pull in the lion's share of the money when the market provides the opportunity. So this is our short presentation today with a lot of information. I'm aware of it, but there's no other way to do it. We have to lay it all out, lay it down so you get it and you can use it right away. Jeff Killian for the VTC. The time is now 8:44 a.m. Eastern Standard on 6/11/2024. My pleasure to present to the world, and we will pick it up on the next vid.